As we approach 2025, investors are facing a new era in the financial world. Stocks, cryptocurrencies, and bonds are all part of the conversation, but one timeless asset continues to stand out: precious metals. Gold and silver have weathered economic storms for centuries, but with the changing landscape of the global economy, are they still the safe haven they've always been? In this video, we'll take a closer look at whether gold and silver are worth investing in for the upcoming year, with all the facts and insights you need to make an informed decision. Precious metals like gold and silver have been used as stores of wealth for thousands of years. From ancient civilizations to modern economies, these metals have provided a safe haven during times of uncertainty. But in 2025, as the world faces new challenges, economic instability, inflation fears, and shifts in global markets, many investors are asking whether gold and silver are still relevant or if their appeal is fading. Gold has long been seen as a hedge against inflation and currency devaluation. Its scarcity, combined with its role as a universal store of value, has made it a reliable asset during times of financial uncertainty. In 2024, gold has continued to show resilience, trading around $1,900 to $2,000 per ounce, a steady value despite market fluctuations. Silver, while more affordable, has also followed a similar pattern, showing considerable growth in recent years. As we move into 2025, these metals remain highly relevant in the investment world, but there are several factors to consider before diving in. Gold, the timeless investment. Gold has historically been a safe haven asset, particularly during times of economic crisis. Its value tends to rise when fiat currencies lose purchasing power, making it a reliable hedge against inflation. As of 2024, gold prices have remained relatively steady despite the market's ups and downs. The price per ounce is hovering around $1,900 to $2,000, which is still considerably higher than its price 5 years ago. In fact, over the past decade, gold has appreciated by nearly 50%, making it a strong asset for long-term investors. One reason for this stability is the growing uncertainty in global financial markets. Economic downturns, geopolitical tensions, and inflationary pressures have all contributed to the steady demand for gold. Central banks around the world have been stockpiling gold in large quantities. As of 2024, countries like China, Russia, and India have been increasing their gold reserves, signaling their confidence in the metal's long-term value. In fact, central bank gold purchases reached record levels in 2023 as governments sought to shield themselves from the volatility of the global economy. However, it's not just institutional demand that is driving gold prices higher. Retail investors are also flocking to the precious metal as a means of diversifying their portfolios and protecting their wealth. With fears of economic instability, many investors see gold as a way to safeguard their savings from currency fluctuations and stock market volatility. The rise of gold-backed exchange-traded funds, ETFs, and online gold trading platforms has made it easier than ever for individual investors to gain exposure to the metal, which has further increased its accessibility and appeal. But while gold continues to shine, it's important to note that it is not without its challenges. The metal's price can still be affected by fluctuations in interest rates, changes in monetary policy, and shifts in global demand. In 2025, investors will need to closely monitor these factors, as they could impact gold's performance in the coming years. Silver, a more affordable alternative. Silver, often referred to as gold's little brother, has also seen significant growth in recent years. While it does not have the same level of status or recognition as gold, silver is still highly valued as both an industrial metal and a store of wealth. Over the last decade, silver has had its share of price swings, but it has experienced a notable increase in value. As of 2024, silver is trading at approximately $25 per ounce, up from around $15 just 5 years ago. One of the key drivers of silver's growth is its dual role in the economy. Unlike gold, which is primarily seen as a store of value, silver is used extensively in industrial applications. It plays a crucial role in industries like electronics, solar energy, and automotive manufacturing, where its conductivity and durability make it an essential material. As global demand for these technologies continues to rise, particularly with the push for renewable energy sources like solar panels, the demand for silver is expected to increase as well. Silver is also benefiting from the same economic uncertainties that are boosting gold prices. Like gold, silver is seen as a hedge against inflation and currency risk. The lower price point of silver, compared to gold, makes it a more accessible option for retail investors who want to gain exposure to precious metals but cannot afford to buy gold in large quantities. Silver is also a more volatile asset, which means it has the potential for higher returns, but it comes with greater risk. Investors who are willing to tolerate short-term price fluctuations might find silver to be an attractive investment. One of the challenges facing silver, however, is its price volatility. While it has shown strong growth in recent years, it is still prone to sharp swings, which can make it more difficult to predict. Additionally, the metal's industrial demand is subject to changes in technology and global economic conditions. For example, if the demand for solar panels or electric vehicles slows down, the price of silver could be negatively impacted. Precious metals in the context of 2025. As we look toward 2025, there are several factors to consider when it comes to investing in precious metals. Both gold and silver continue to have strong appeal, but they are not immune to the challenges facing the global economy. Here are a few key trends that will shape the precious metals market in 2025. 1. Inflation and economic uncertainty. The global economy is facing inflationary pressures, which are expected to continue into 2025. Central banks around the world have been tightening monetary policies, raising interest rates to curb inflation. This has put pressure on traditional assets like stocks and bonds, making gold and silver more appealing as safe haven investments. If inflation continues to rise, demand for these metals could increase, pushing prices higher. 2. Interest rates and central bank policies. Interest rates play a crucial role in the performance of precious metals. When rates are low, gold and silver tend to perform well, as investors seek alternative assets that provide protection against inflation. However, if interest rates rise significantly in 2025, the appeal of gold and silver might diminish as bonds and other interest-bearing assets become more attractive. Investors will need to keep a close eye on central bank policies in the coming years. 3. Technological advancements and industrial demand for silver. The demand for silver is expected to continue growing, driven by its industrial applications. As more countries focus on renewable energy and electric vehicles, the demand for silver in these industries will likely increase. However, technological shifts or changes in industry standards could impact this demand. Silver's role in technology and manufacturing will remain a key factor in its price movements in 2025. 4. Geopolitical risks and global tensions. Geopolitical risks and instability have always been a factor in the performance of precious metals. Gold, in particular, has traditionally done well during times of political uncertainty. In 2025, ongoing tensions between major global powers, trade wars, and regional conflicts could trigger a surge in demand for safe haven assets like gold and silver. So is investing in gold and silver still worth it in 2025? The answer depends on your financial goals, risk tolerance, and the state of the global economy. Both gold and silver offer strong potential as hedges against inflation and economic uncertainty. Gold remains the go-to choice for investors seeking stability and long-term growth, while silver offers a more affordable option with higher growth potential and risk. As we move into 2025, the precious metals market will continue to be shaped by factors like inflation, interest rates, technological advancements, and geopolitical risks. For investors looking for diversification and a hedge against market volatility, gold and silver are still solid choices. However, it's important to remember that all investments come with risks, and precious metals are no exception. Prices can fluctuate based on a wide range of factors, so it's crucial to stay informed and consider your investment strategy carefully. If you're planning to invest in gold and silver in 2025, make sure to do your research, monitor market trends, and consult with a financial advisor to determine the best approach for your portfolio. In conclusion, gold and silver remain valuable assets in 2025. But they are not without their risks. With inflation, economic uncertainty, and geopolitical tensions on the rise, these precious metals continue to offer a hedge against financial instability. Whether you choose gold's stability or silver's potential for higher returns, both metals have a place in a diversified investment strategy. If you found this video helpful, don't forget to subscribe to our channel for more insights and updates on smart investing. Share your thoughts in the comments below. Are you investing in gold or silver in 2025?